If you're looking to reduce taxes, lower your investment risk, and avoid running out of money in retirement without doing everything yourself, this might be the most important video you watch this year. In this video, if you have over $500,000 in retirement savings and are between the ages of 59 and 70, I'll show you ways to potentially save $450,000 or more in future lifetime taxes. And the younger you are within that age range, the greater your likely saving. But before I start, it's worth noting that every client and their situation are unique. And so no statements made in this video are guaranteed outcomes. It's all based on your personal goals, planning, and situations. So let me start off by asking you, what do you think is the biggest threat to your retirement? Most people say market crashes or inflation, or maybe running out of money too soon. But the real threat, it's the money you never see leaving, because it's taken through avoidable taxes. You see, if you've done a good job saving in a 401k, IRAs, or other tax-deferred accounts, congratulations. But those same accounts could be setting you up for a massive tax hit in your 70s and beyond, even after you pass away. In fact, many of the retirees we meet are unknowingly on track to lose hundreds of thousands of dollars, not because of bad investments, but because of how the tax code works. Many retirees and their advisors put too much emphasis on whether they should plan for taxes or not based on today's tax rates, and miss the opportunity to project what it will be in the future. Once you hit your early to mid 70s, the government forces you to start withdrawing money from your accounts, even if you don't need it. All that money comes out as income and is taxed at current tax rates. That's called required minimum distributions, or RMDs. The more you withdraw, the more of your Social Security becomes taxable, the higher your Medicare premiums go up, and the more you risk triggering stealth taxes that quietly eat away at your wealth. By not planning for future taxation, you're locking yourself into these taxes for 10, 20, or 30 years and longer. If you have children, the remaining obligation passes on to them at their tax rate. So yes, your Medicare premiums, for example, may cost more for a few years planning for future taxes, but the key is, how much are you saving on increased premiums that you'll be forced to pay for 10, 20, 30 years on top of your increased tax bill by being forced to take a higher income? And unfortunately, most CPAs won't warn you about this because they focus on last year's taxes. And most financial advisors won't either, because they're focused on investments, not retirement tax strategies. So, is there a better solution? Yes. That's why we created the Retirement Tax Planning Roadmap. This isn't a generic financial plan, it's a customized strategy built around three goals: legally reducing your lifetime tax bill, creating predictable, tax efficient income for retirement, protecting and growing your wealth with less stress and fewer surprises. And here's the best part: we're not just going to give you a PDF and wish you luck. We actually implement the plan with you, manage your assets, and help you avoid the costly mistakes that many retirees only discover when it's too late. Take one of our clients, a couple in their 60s who already retired and have successfully saved enough money to meet their income needs. However, nearly all of their savings were held in IRAs and 401ks, which meant that every time they took money out of these accounts, it would trigger a taxable event. Their financial advisor didn't inform them about recent changes in the tax code. After assessing their situation, we developed a plan to convert $500,000 of the retirement funds into an account where withdrawals would be tax-free, like a Roth IRA. The conversion typically would cost them around $150,000 in taxes. Yet by leveraging current tax law provisions and by utilizing non-retirement assets, we managed to reduce their tax liability to almost nothing. This approach provided them with greater financial security and helped them save hundreds of thousands of dollars in taxes over their lifetime. Savings they didn't know were possible. Or take into account a successful business owner that we're working with. He was earning a high income and planned to retire in the next few years. But his CPA never mentioned a cash balance plan. After reviewing his situation, we implemented a custom strategy that allowed him to defer hundreds of thousands in taxable income, lower his overall investment risk, save over $1 million in income taxes over just 5 years before he even retires, reduce his taxable income to enable Roth conversions, saving him $2.5 million in retirement taxes. And that one strategic change not only protected his income, it gave him more peace of mind and flexibility as he approached retirement. And he's not alone. We regularly work with clients in their 50s and 60s who've done a great job of saving, maybe $500,000, $1 million, even $4 million or more. But without a tax plan, they're unknowingly on track to overpay the IRS by $400,000, $700,000, or even more over their lifetime. The good news, when we build and implement a retirement tax planning roadmap with them, things change fast. By employing appropriate strategies, tailored investment allocation, and incorporating private tax-free pensions when suitable, we assist clients in preserving their wealth and transferring it efficiently to future generations. So the question is, what would your roadmap look like? How much could you potentially save in avoidable taxes? And how much more confident would you feel knowing there's a clear plan in place for your income, investments, and legacy? That's exactly what we'll help you uncover during a complimentary retirement tax strategy call. To get started, all you need to do is click the button below this video to schedule your call. On the call, we'll review your current financial planning and goals, identify where you may be missing opportunities, and educate you how our retirement tax planning roadmap can help reduce taxes, create predictable income, and protect your wealth. There's no cost for the call, and there's no pressure to move forward unless it's clearly a good fit. Our typical clients are between the ages of 59 and 70, have at least $500,000 saved for retirement, and are looking for a long-term partner to help them manage their wealth, not just a product or a one-time plan. Now, this isn't for everyone. If you're just looking for a quick tip or plan to do it all yourself, that's totally fine. But this process probably isn't right for you. But if you're serious about building a tax-smart retirement plan and want expert guidance every step of the way, click the button below to schedule your call. Remember, the earlier you start, the more you can likely save in retirement taxes. And even if you're working with another financial advisor, it doesn't hurt to get a second opinion, especially when that second opinion could potentially save you hundreds of thousands of dollars in avoidable retirement taxes. So if you're ready to see what's possible with the right plan, and you want to feel confident that you're not leaving money on the table, click the button below to schedule your complimentary retirement tax strategy call. We look forward to helping you retire with clarity, confidence, and control.